Hello and welcome to yet another episode of the IAS series. My name is Pooja Dwivedi. Today we are going to discuss the aspects related to the acquisition by one of the largest banks in the world, UBS of the Credit Suisse. Okay, so we are going to discuss that because it is going to have an impact on India as well. From the perspective of GS mains paper, third, it is important to look at these many topics. First of all, let us look at the news. So, Switzerland's biggest bank, UBS, has agreed to buy its rival Credit Suisse. In order to contain the global financial crisis that the panic has started because of that, it sparked soon after the two American banks collapsed recently. UBS will be paying around $3.2 billion to Credit Suisse. The Swiss Central Bank will give $108 billion in liquidity assistance for both the banks so that it is smooth in nature. Moving ahead, meanwhile, the Swiss government said that it would provide more than $9 billion to backstop some losses that UBS may incur by acquiring Credit Suisse. Moving ahead. Now, before we discuss history of the UBS bank, first of all, let us look at the developments that have been going on and that has actually impacted such a move. The Federal Reserve has said that it had joined central banks in Canada, England, Japan, the European Union and Switzerland in a coordinated action to enhance market liquidity. Because of the collapse of certain very important banks, this move has been undertaken. Switzerland awoke to a new era with a considerable dent in the country's long-held pride in its banking expertise, and that was ought to happen. Credit Suisse told staff its wealth assets are operationally separate from UBS for now, but once they merged, clients might want to consider moving some assets to another bank if concentration was a concern, because putting all your eggs in one basket is a threat. The Swiss Bank Employee Association has said that it was deeply shocked by the takeover and wants the cutoff of employees should be as minimum as possible. Under the deal, 16 billion Swiss francs, that is $17 billion, of Credit Suisse's additional Tier 1 debt will be written down to zero on the orders of the Swiss regulator. So these were the developments that were actually concerning in nature, and that is why this particular move has been undertaken. Now, if we talk about the history of UBS Bank, it offers private banking, wealth management, asset management and investment banking services to private individuals, to corporate and institutional clients. It was established in the year 1998 by the merger of the Swiss Bank Corporation and the Union Bank of Switzerland. Notably, the name UBS, it has been derived from Union Bank of Switzerland. It is not an acronym, okay? The Swiss Bank Corporation was originally set up as a Basel Bank Corporation in 1854 by 6 private individuals to provide credit to Swiss railroad and manufacturing entities. Now, it was later on merged with Zurich Bank Corporation, and by 1897, the Basel Bank Corporation had consumed 2 other Swiss banks and changed its name to Swiss Bank Corporation. Another one, the UBS that we are talking about, it was established in 1912 by the merger of Bank in Winterthur. It was merged with Toggenburger Bank. Despite the success of both the Swiss Bank Corporation and the UBS, they were merged together as they faced intense competition coming from the American banks. So they became a larger, much important entity. Now, the current market capitalization of the UBS is $63 billion. It is headquartered at Zurich. There are approximately 200 branches, 4,600 clients that are client advisors in Switzerland alone. It also provides its services in 50 other countries, including India. We will talk about that as well. UBS has got a banking license from RBI in 2009, but in 2013, it wound up its operations in India, returned the license to the RBI because of the broader global move which was driven by stricter capital requirements that had been brought due to the Basel III norm. So it's wound up its operations. It was one of the first to look at a complete exit from business in India. UBS Securities, which is separate from the banking systems, it has a separate investment banking license which has been given by SEBI, and UBS has faced a probe in India in an alleged money laundering case which involved the Hassan Ali Khan, a controversial businessman. Okay, so that is why it is important to look at all this. In October 2012, UBS decided to shut down its fixed income business in India as a part of the global decision to exit the fixed income space. Now in January 2013, that we talked about UBS, we will talk about Credit Suisse, the bank UBS has acquired. Credit Suisse received a license from Reserve Bank of India to establish a branch in Mumbai. Now it has over rupees 20,000 crore in assets, which is a presence in the derivatives market, and it has funded 60% of assets from borrowings, of which 96% is up to 2 months. 0.1% of its share assets are there. It is very minimum. If we compare it to domestic banks, it's not a lot. Credit Suisse is present as a branch and has 1.5% share among foreign bank assets and 0.1% in asset sector, not a lot. Credit Suisse has only one branch in India, and this is the base. It is the 12th largest among the foreign banks. Borrowings in India form 73% of the total liabilities, which is concerning for India. 96% of the borrowings have a tenure of up to 2 months. And the deposit base of Credit Suisse is smaller at rupees 2,800 crore, forming 20% of the total liabilities. 70% are from subsidiaries. Now, UBS Securities Private Limited, India Private Limited, it is a security of India Exchange, �SEBI, basically SEBI registered stockbroker. It holds membership in the National Stock Exchange and also Bombay Stock Exchange. It provides corporate, institutional and wealth management. The clientele is like this, with expert advice, innovative solutions and the rest. India is one of the technology hubs for UBS with a sizable market, and that is why we are discussing it. Credit Suisse Securities Private Limited was formed in the year 1996. It does financial intermediation except insurance and pension funding. This is a prelims fact. It already offers wealth management, investment, banking, asset management, which is generally given by UBS as well, and serving high net worth corporate and institutional clients. And these two firms are likely to be integrated in India as the global merger process is taking place, so that India is not impacted a lot. Now, as many as 45 foreign banks are right now present in India. They have a relatively smaller presence in India because 6% share is there in total assets and 4% in loan and 5% in deposit. They are more active in the derivative market where they have 50% share in the branch, and they are also present through branches of the parent company, with only a few present as wholly owned subsidiary. Like HSBC is there, Citibank, which has now sold its consumer-based business to Axis, Standard Chartered is there, Youth Bank is there, JP Chase, it is the largest US bank. So this is how it works for a country like India, where the liability is not a lot and the asset is also not a lot. It is better for India in the current times that the foreign banks do not have a large presence. Okay, so that's it. Thank you so much for watching. Stay updated.